Welcome to the deep dive. This is where we really cut through the noise, give you the essential info, and help you get truly well informed fast. Today we're diving deep into something specific in the tax world, something that affects folks shaping the next generation, the educator expense deduction. It sounds niche, maybe, but it's actually a pretty fascinating benefit. Yeah, so our mission today is pretty straightforward. We want to unpack this deduction, like who exactly qualifies, what kind of expenses actually count, and what's the real tax benefit look like for you, the listener, whether you're an educator or just curious about taxes. Okay, but before we really get into the weeds, just a quick reminder. This deep dive, it's all based on material from Farhat lectures. That means all the content, the examples, the explanations, it's derived from the accounting resources over at farhatlectures.com. So if you're an accounting student, maybe studying for the CPA, or even a professional, you should check out the website. They've got extra practice questions, video lectures, tons of support to really hammer home what we talk about today. Big thanks to Professor Farhat for providing all this great material. All right, with that covered, let's unpack this specific tax rule. It's meant to give a nod to educators, for dipping into their own pockets, but like always with taxes, the details matter a lot. Knowing those little nuances can really make a difference. So let's kick things off with the absolute basics. When we say educator for this tax break, who are we actually talking about? It can't be just anyone who teaches something, right?
That's exactly right. It's a really crucial first step, and you hit the nail on the head. The definition is quite specific for this deduction. It's actually narrower than you might think. We're talking about people who work as a teacher, an instructor, a counselor, maybe a principal, or even an aide.
Okay.
But here's the key part. They have to be working with students in kindergarten through grade 12. So K through 12. That's the focus.
K through 12.
Exclusively K-12 education.
Uh-huh.
And there's more. Besides the role in the grade level, they also need to put in the hours specifically, at least 900 hours during a school year.
900 hours, wow.
It just shows a real commitment. And the education they provide, it have to be what's considered elementary or secondary education under state law. So, public school teachers, private school teachers, maybe some charter school folks too,
Yeah.
if they meet all those points.
That clears things up right away. I bet a lot of people might not realize that K-12 limit because, the word educator sounds broader. So what about, say, college professors or someone teaching night classes to adults? Do they sometimes think this applies to them?
Oh, absolutely. That's a super common misunderstanding. And the source material we're using today is really crystal clear on this point. College professors, even though they're obviously educators in a broad sense, are specifically excluded from this particular deduction.
Okay.
The IRS drew a very firm line right there at the K-12 level. You really have to think of this as a targeted benefit aimed specifically at those working with younger students in like a traditional school framework.
Makes sense.
Yeah, and to make it really concrete, the material gives this example. My cousin Emily used to be a middle school teacher and qualified for this deduction, but her husband Steve, a college professor, would not.
Okay, that paints a clear picture.
Right. It just hammers home that this isn't some catch-all educator break. It's very specific. So if you're teaching college or adults, this deduction, unfortunately, isn't for you.
Got it. That K-12 focus is key. So, okay, let's say a teacher is listening and thinking, all right, I fit that K-12 description, I work the hours. What's next? How much can they actually deduct? And just as importantly, how do they claim it? What's the actual number and where does it pop up on the tax forms?
Right. Let's get to the numbers. So the maximum amount an eligible K-12 educator can deduct is up to $300. And it has to be for unreimbursed business expenses.
Reimburse. Okay.
That part's really important. We'll definitely circle back to what that means. Now, there's a little twist for married couples. If both spouses are qualifying educators and they file their taxes jointly, they can deduct up to $600 total.
So double.
Well, yes and no. It's up to $600 total, but and this is the catch. It's still capped at $300 for each individual spouse. So one spouse can't claim, say, $400. Even if the other claims $200, each person maxes out at $300. The $600 is just the combined ceiling if both qualify.
Okay, so $300 per person max, even if filing jointly.
Exactly. And just a little historical note. This deduction was actually $250 for a really long time. It only recently went up to $300. It is indexed for inflation now, so it could potentially nudge up in future years, but we're focusing on the current $300 figure. It tends to move slowly, though.
Interesting. $300 for a lot of teachers, I imagine that feels like, well, a drop in the bucket compared to what they might actually spend out of pocket during the year. Is there a reason for that specific amount, or is it just sort of stuck there historically.
Yeah, that's a fair point. It's probably a bit of both, really. Historically, it's always been a pretty modest amount. And while you definitely hear talk about increasing it, to better match what teachers actually spend, it just hasn't seen huge jumps. The thinking behind it, at least what lawmakers often say, is that it's meant to give some relief for those common everyday classroom costs. It's not designed to be like a major tax shelter or fully compensate them. Think of it more as a recognition of that personal investment rather than full reimbursement.
Okay, a recognition. And critically, you mentioned how you claim it. Where does this $300 deduction actually go on the tax return, and why does that placement matter so much for the listener? Because, as you know, not all deductions are treated the same, are they?
No, they definitely aren't. And you've really hit on something vital there. This is where the deduction becomes particularly beneficial for the educator. It's classified as an adjustment to income.
An adjustment to income.
Right. You might also hear it called an above-the-line deduction, or technically a deduction for AGI. What that means, basically, is it gets subtracted from your income before your adjusted gross income is even calculated.
Okay, and why is that so good?
Well, the huge benefit is this. The educator doesn't have to itemize their deductions to claim it. They don't need to mess with Schedule A.
Wow, really?
Yeah. This means even if they take the standard deduction, which, let's face it, is most taxpayers these days, they can still get this $300 deduction. It makes it super accessible.
That's fantastic. So just to make it super clear for everyone listening, even if I don't itemize deductions, I can still claim this educator expense. That seems like a massive advantage for most teachers. It cuts out a lot of complexity.
It absolutely is. It's like the IRS is sending a signal saying, we want this specific benefit to be easy to get for K-12 educators. By making it above the line, they're making it available pretty much regardless of your other deduction choices.
That's great.
Yeah, it just directly lowers your taxable income without extra hoops. And where you find it is on Form 1040, but it's listed on Schedule 1, specifically line 26, under the Educator Expense label in Part 2. So going back to our example, Emily, the middle school teacher, if her deduction was $300, that amount would flow directly onto her main Form 1040, reducing her income before taxes are calculated on it.
Excellent. That really highlights how accessible it is. Okay, so now let's dig into the specifics. What exactly qualifies as an expense? When a teacher spends their own money, what kind of purchases can they actually count towards this $300 limit? Is it just like pencils and construction paper?
Haha. Well, it's definitely more than just pencils and paper, thankfully. The rules allow for a pretty decent range of things, as long as, and here's that word again, they are unreimbursed.
Right, unreimbursed.
So the list includes things like books that are related to their teaching field.
Mm.
Professional development books, maybe curriculum guides, things like that. General classroom supplies are definitely on the list, markers, poster board, you name it.
Okay.
It also covers computer equipment and other kinds of equipment used in the classroom.
Mm-hmm.
So that could be a personal laptop if they use it for lesson planning, maybe even a small projector if the school doesn't provide one, or perhaps a special printer just for classroom stuff.
That's broader than I thought.
Yeah, and also supplementary material used in the classroom. That's kind of a catch-all, right?
Yeah.
It could be art supplies for a project, educational games, maybe even specific software they need for teaching.
I can definitely see teachers spending money on all those little extras that make a classroom special. What about professional development? That's always a big cost for staying up to date.
Yes, absolutely. That's another really important category. Professional development courses.
Yeah.
If an educator pays out of pocket for a course or workshop to improve their teaching skills or knowledge directly related to their job, that expense can qualify too.
Good to know.
Yeah, it's not just for getting like an advanced degree, but for those specific trainings that help them in their current role. Now, all this listing these expenses brings up a super critical point. It might sound basic, but you'd be surprised how often it gets missed. Documentation.
Ah, the paperwork.
Exactly. You absolutely must have records to back up these expenses. Keep those receipts. Keep bank statements, especially for things like courses. If the IRS ever asks, you need proof. No records, no deduction. Simple as that. It's almost like teachers need to be expert bookkeepers too.
It really sounds like it. Okay, so we've covered the who, the how much, and the what. Now let's try to put it all into perspective. That $300 deduction sounds nice, definitely better than zero. But what's the actual impact on a teacher's tax bill? Like, how much cash does it really save them?
Right, this is where we need to talk about tax brackets. It's key to understanding the real value of that $300. See, the deduction reduces your taxable income by $300, but the actual cash savings, that depends entirely on your marginal tax rate, the rate you pay on your last dollar of income.
Okay, so it varies.
It varies. Let's use a simple, maybe slightly high example just for illustration. Say an educator is in the 30% federal tax bracket. In that case, the maximum tax savings from the $300 deduction would be $90. That's just the $300 deduction times the 30% tax rate.
$90.
Right. But realistically, a 30% bracket might be higher than where many teachers fall, especially early in their careers.
True.
So if we look at more typical brackets, like maybe the 10% or 12% or even 22% bracket, let's say 10% for simplicity. At 10%, that $300 deduction translates to $30 in actual tax savings. If they're in the, say, 20% bracket range, it's $60.
So $30 or $60 is maybe more typical.
Quite possibly, yes. The important thing to grasp is that it does provide a direct reduction in the taxes you owe because it lowers the income you're taxed on. It's not a tax credit, remember, which reduces your tax bill dollar for dollar. It's a deduction. So the real savings depend completely on your individual tax situation, specifically your tax bracket.
That makes it very clear. It's not life-changing money, but hey, every bit helps, right? Especially for buying more supplies. Okay, now for the potential pitfalls. Are there any crucial gotchas or, specific situations we need to flag where someone might think they can take the deduction but actually can't?
Oh, yes, there are definitely rules to watch out for. The big one revolves around this idea the IRS really doesn't like, which is often called double dipping.
Double dipping, right?
The basic principle is you cannot claim this $300 educator deduction if you already got some kind of tax-free money to cover those same expenses from a different source.
Okay, like what kind of sources?
Well, for example, maybe you used interest from U.S. savings bonds, and that interest wasn't taxed because you used it for education costs. Or maybe you took tax-free money out of a 529 plan or a Coverdell education savings account for those expenses. If you already got a tax break on the money you used for the expense, you can't then turn around and deduct the expense itself using the educator deduction. One tax benefit per expense, basically.
That makes total sense. You can't get paid back twice, tax-wise. But I bet where it gets really fuzzy is with employer reimbursements. How does that work?
Yes. This is probably the most confusing part for many people, but it's super important to understand. Let's break down the employer reimbursement scenario. There are two main ways it can happen. Scenario one, your school or district reimburses you for, say, $300 in supplies you bought. And they include that $300 reimbursement amount in your taxable wages on your Form W-2.
So you pay income tax on the reimbursement.
Exactly. Because you pay tax on that $300 reimbursement money, the IRS says, okay, you can still take the $300 educator expense deduction. You're essentially just offsetting the income you were taxed on with the legitimate expense. It washes out, tax-wise.
Okay, that seems fair.
Now, scenario two. Your employer reimburses you for the $300. But this time, they do not include that reimbursement on your W-2. It's treated as a non-taxable reimbursement. You just get the money back tax-free.
Right.
In this case, because you received the money tax-free to cover the expense, you cannot take the educator expense deduction for that same $300. You were already made whole without paying taxes on the reimbursement. Claiming the deduction would be double dipping.
Gotcha. So it all hinges on whether that reimbursement shows up as taxable income on your W-2.
Precisely. Let's use Emily again. If she spent $300 and the school gave her a $300 check that was not on her W-2, she can't deduct it. She got tax-free money back. But if that same $300 reimbursement was added to her W-2 income, then she could take the $300 deduction to offset it. It really comes down to, was the money you got back taxed or not? Educators need to pay close attention to their pay stubs and W-2s to know how reimbursements are handled.
That is a classic tax complexity. It really underscores how important it is to understand your W-2 and how your employer is coding things. So if you're an educator, you need to track not just your spending, but also how you get paid back if you do.
Absolutely. And, if we zoom out for a second, this whole reimbursement rule kind of highlights how tax law tries to support certain groups, like educators, but always with these very specific guardrails built in. They want to prevent misuse, prevent people getting multiple tax benefits for the exact same dollar spent. It's about fairness, in theory.
Right, maintaining some kind of balance. So let's bring it back to you, our listener. What does all this mean for you? Well, hopefully, you now have a much clearer picture of the specific tax benefit for educators. Maybe you are an educator and now you feel more confident about claiming it, or maybe you know teachers and now you can share this insight. Either way, maybe this deep dive makes you think a bit more about how these targeted deductions work and how expenses get treated differently depending on the situation. You've got the details now: who qualifies, what counts, how much, and those tricky reimbursement rules. And maybe just a final thought to leave you with. Think about the dedication and frankly, the personal financial investment so many educators pour into their classrooms and their own professional growth every single year. How do these tax provisions, even if they seem small like this $300 deduction, fit into that larger picture? How does our system acknowledge and support the crucial work these individuals do? It's something to consider how policy reflects value, even in these seemingly minor details. And if you found this discussion valuable, don't forget all the core material came from Farhat Lectures. Check out farhatlectures.com for more. They've got tons of resources, practice questions, videos, support, whether you're studying accounting, prepping for the CPA exam, or just want to solidify your understanding of topics just like this one. Definitely worth exploring to continue your learning journey.